Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. A late sell-off on the Lal Street. The sensex drops over 400 points. Nifty loses 120, ending at the low point of the day. Mid-cap see marginal losses. After 7 months, India's M&A watchdog gets a chairperson. Ravneet Kaur becomes the first woman to lead the Competition Commission of India. With this appointment, the CCI has quorum to rule on the 200 anti-profiteering cases and 50 antitrust cases pending before it. Vodafone announces 11,000 job cuts as the new CEO says performance is not good enough and the telecom company must change, expects little to no growth in earnings in the new financial year. We're talking about Vodafone globally. The World Health Organization cautions against artificial sweeteners, say they do not provide any long-term benefit in reducing body fat, warns that prolonged use increases the risk of type 2 diabetes, cardiovascular disease and even death in adults. US-based Baron Capital Group marks down Swiggy's valuation by 40% to just over $6 billion. This comes days after Invesco cut the food aggregator's valuation twice in the last 4 months. All three founders of fintech startup Zest Money resigned. This comes 2 months after a deal with PhonePe collapsed due to, and I quote, due diligence concerns. 3 internal team members appointed to lead the company and the founders will remain shareholders. Karnataka's wait for a new chief minister continues. Both the Congress state chief D.K. Shivakumar and former chief minister Siddaramaiah stake claim both in Delhi to bolster their claim. Shivakumar says he will not resort to backstabbing or blackmailing regardless of the party's decision. Indian working women experience higher levels of stress and burnout compared to global counterparts and still face gender discrimination. A Deloitte report covering 500 women highlight that gender rights, financial security, physical and mental health are top concerns for women at workplaces. Well, let's go straight to the day's trading action. A last hour fall saw the markets closing at the day's low. So the Nifty and the Sensex ended over 0.5% in the red. We saw a big fall in HDFC and HDFC Bank, which weighed on the market and dragged the Nifty lower. The Nifty is now back below the 18,300 mark. Broader markets, though, did outperform. The blue chips, that is. Prashant is standing by to take us through the details. Prashant, what led to this last hour sell-off?
You know, there is an old saying that the market does the most expected thing in the most unexpected way. And I think it came true today because when we started this morning, things were looking up. We were coming off after a very strong session yesterday. The Nifty had come within 10 paise of an all-time high. SGX, etc. were indicating a good start. By close, it looked very different. The Nifty, the Bank Nifty, both came under pressure. The Bank Nifty sold off, especially in the last 20 minutes of trade. And the Nifty closed below an important kind of support level. There's a rising channel and it closed below the lower end of it. So things were different. There was nothing very large in terms of cracks, but the sentiment did sour a little bit. Is it nervousness around all-time highs? Perhaps yes, because otherwise there was not very much in terms of reasons to explain the move. Now, what put pressure? The HDFC twins, there was a technical reason, dividend-related, Reliance, Kotak Bank and ITC, these 5 names were responsible for about 80% of the cut that we saw on the index. BPCL, ONGC, Coal India, resources companies were higher on the Nifty. Market breadth also completely evened out. It worsened as we headed into the close. But I have to say that the list of volume-led gainers is much longer and it's a much healthier looking broader market, even though it doesn't show up on that 1:1 advanced decline ratio. So Astral, Mazgaon, Birlasoft, Hudco, Sonata Software, Repro, Sequent, Seat, Shakti Pumps, Taj GVK. I can go on with some of these names. Barbecue, which has been a dead and out stock, that came up as well. There were stocks under pressure, but with volumes, it's a much smaller list. Zensar, Berger, Adani Total Gas, Dish TV were some of the names which were under pressure. As I said, the market has dithered. It's come off in today's session, and we'll need to see if this is an extended kind of consolidation sideways lower, or the market starts to find its mojo back quickly. And I think global cues will be important. We get the US retail sales number later tonight, and I think that will be a cue to understand how the US consumer is doing, because a lot of chatter around which way US markets are headed as well. Back to you.
Prashant, many thanks for joining us. Now, crude oil prices continue to trade sideways. Weaker than expected data from China has triggered demand concerns. However, this was offset by supply worries caused by the US's plans to refill its strategic petroleum reserves, as well as wildfires in Canada. Back home, the fuel retailing joint venture of Reliance Industries and UK's BP has launched a premium diesel at regular prices with no additional cost for the first time in the Indian market. So Jio BP is saying that the fuel will yield annual savings of 1.1 lakh crore rupees per truck. So that's the big announcement coming in from the Reliance and BP joint venture. The chief diplomat of the European Union has called for a crackdown on India for reselling Russian oil into Europe as refined fuels. In an interview with the Financial Times, Josep Borrell, the High Representative of Foreign Affairs, has said that India buying oil from Russia is normal, but it being resold to Europe and then other member nations will have to act. This comes days after the Oil and Gas Minister Hardeep Puri told CNBC-TV18 that India does not have any ideological bias when it comes to importing Russian oil. He added that Europe would have been in a deeper recession if there was no Russian oil on the table. Take a look.
We don't have any ideological hang-ups on whether we import 1 million from X, Y, or Z. Our traditional suppliers have been UAE, Saudi Arabia, Iraq, Kuwait, and now Russia. And Guyana is coming on board, others. And the world will move on. The world needs to get energy. And by the way, if India didn't buy that 30% of our requirement from the Russians, if we had to buy it from the Saudis and the UAE, and Russian oil was not on the market, you know what the price of oil today would be? So instead of one large European economy which is facing recession, it would have been in deep recession today.
Well, from crude now to international news, telecom giant Vodafone has announced that it will lay off 11,000 employees in the next 3 years. The company's new CEO, Margherita Della, has said that Vodafone's performance has not been good enough. She added that the company must change and has sought for a simple organization as it forecasts little to no growth this financial year. The layoffs will impact 10% of Vodafone's total workforce. And speaking of job cuts, tech giant Amazon is laying off around 500 employees in India across different verticals. This round of layoffs is part of the broader layoffs announced by the CEO Andy Jassy in March, and this is expected to impact around 9,000 employees globally. Multiple reports say the layoffs are likely to impact employees that are part of the web services, human resources and support department. The European Commission has cleared the deck for Microsoft's $69 billion acquisition of gaming firm Activision Blizzard. This comes just weeks after the UK competition regulator blocked the deal. The European Commission has said that Microsoft has addressed concerns over hurting competition in the cloud gaming sector. And speaking of M&A approvals, after 7 months, India has a full-time chairperson for the Competition Commission. Ravneet Kaur has become the first woman to head the CCI. The organization has more than 200 pending cases related to anti-profiteering and antitrust issues. Parikshit is standing by with more. Finally, quorum at the CCI, Parikshit.
Yes, the Competition Commission has been without a permanent chairperson for 7 months now, and many crucial deals were pending approval. Now, because of the lack of quorum, the government had waived off the quorum requirement and allowed the 2 members, including the acting chairperson, to clear M&A deals. But there were many antitrust deals, almost 50 big deals, which are under probe, and the CCI chairperson has to clear the investigation outcomes on that front. At the same time, there are 200 cases related to anti-profiteering that the CCI has to approve and go through, and that also needs a nod of the CCI chairperson. So whenever Ravneet Kaur, the 1988 batch IS officer who will have a 5-year tenure, joins, she will really have her hands full. She'll have to hit the ground running. Apart from that, cement cartelization is a major investigation that she has to look into, conclude. Also, there is an investigation going on against hospitals for selling medicines and medical devices at inflated prices. So those are some of the big cases that she has to handle, and many of them are cases against the big tech and startups as well. Let's also not forget the Competition Amendment Bill 2023 has been passed, so rules and regulations to implement that have to be brought into place. She will also be a part of the committee which is looking at the possibility of bringing in a digital competition law to regulate market dominance of big tech companies.
All right, Parikshit, many thanks for joining us. Telecom Minister Ashwini Vaishnav has said that the telecom bill, which aims to establish India as a global benchmark in the sector, will be finalized by July. The minister said that the government has made significant progress on the bill and has also held consultation with all stakeholders. Listen in.
The primary focus is that telecom sector in India should be globally benchmarked should be a sunrise sector, should have a lot of scope for innovation, should have a very simple regulatory framework, and the focus on customer protection, on user protection has to be the prime focus. इन सब चीज़ों को ध्यान में रखते हुए बिल की ड्राफ्टिंग में जो चेंजेस करने हैं उस पे काम चल रहा है अभी, and hopefully we should be able to finalize that somewhere by July, I would say.
That is the telecom minister. In earnings, Bank of Baroda beating estimates in Q4. Net profit grew nearly 170%, while the bank's net interest income registered a growth of 27% year-on-year. Asset quality has improved sequentially, clocking the lowest gross and net NPA ratio in the last 8 years. In more earnings, Indian Oil Corporation reporting a very strong set of Q4 numbers. The company has surpassed street expectations across all parameters. Net profit grew more than 50%, revenues up 10% year-on-year. The calculated gross refining margin for the company stood at $16 a barrel versus the street expectations of $13 a barrel. Now, PVR, India's largest multiplex chain, has registered a net loss of 333 crore rupees in Q4. PVR had clocked a profit of 16 crores in the preceding December quarter. Revenue came in at over 1,143 crore rupees. Now, this was PVR's first earnings season after its merger with Inox. The multiplex has registered a footfall of over 30 million, with the average ticket price being 239 rupees. Ajay Bijli of PVR believes volatility in content consumption is impacting occupancy at cinema halls. Take a look.
Because the volatility is something which is very extreme. So if the movie does well, it does exceedingly well. And if the movie doesn't do well, then it completely tanks. So I think that volatility is something that has probably lasted longer than I thought. So it's lasted about 12 to 14 months now. So there's 17 odd properties, which totaled about 50 screens, are the ones which, leases were coming to an end, and they did not have any life left in them. So I think that always happens after some time when the business reaches its maturity in any retail business.
Well, that is PVR. And staying with startups, in a shocking move, all three founders of instant loan startup Zest Money have resigned from their positions, confirming the development in a LinkedIn post this morning. The founder, CEO Lizzie Chapman, said that a new management would be taking over the company. Their resignations come just months after PhonePay's deal with Zest Money was called off. Ritu joins us now with more. Ritu, what has led to this move by the founders of Zest Money?
Well, the timing is important because it comes just 2 months after PhonePay called off the deal to acquire Zest. And now all three of its founders, Lizzie Chapman, Priya Sharma and Ashish Anantharaman, have resigned from their positions, and a new management team, which is comprising of internal members, has been put in place overnight. Now, we reviewed an email which Lizzie Chapman had sent to, the workforce, the employees last evening, where she said she was stepping down as CEO, Priya Sharma as CFO and COO, and Ashish Anantharaman as CTO of the company, but that they would remain significant shareholders and support the team in the next few months to ensure that there is a smooth transition to the incoming management. Like you said, the other LinkedIn post, of course, this morning, where she confirmed that, they'd be passing on the baton to three internal members, and that's Mohit Chajjar, who's currently the VP of Finance, Mandar Satpathy, who's the Chief Banking Officer, and Abhishek Sharma, who's the Senior Vice President of Growth, are now going to be leading the team. Now, why the company's really been in trouble is because of, a series of regulations from RBI which affected its buy now, pay later business model. And in the last few quarters, we've seen Zest Money nearly exhaust its funding sources, and it was banking on this deal with PhonePay for its very survival, because, Sameer Nigam did say earlier that when he met the company, they were nearly bankrupt. So we know now the deal was called off on the back of due diligence concerns, and the company even had to lay off 20% of its workforce to, ensure that there is business continuity as of last month. In the meantime, PhonePay had extended about $18 million of credit to Zest while it was evaluating the deal. And, we understand while the loan was written off after the deal fell through, PhonePay did absorb about 130 employees from Zest in return, also bought a copy of its tech stack with the consent of the board and the investors, something which Sameer Nigam clarified today in a series of Twitter posts. Now, he even wished the company a bright future and said he'd be rooting for things to turn around. So, but with these resignations really coming at a time when the company's struggling with funds, the future remains uncertain at this point of time.
All right, Ritu, appreciate you joining us. That is the latest in the Zest Money matter. Time for us to head into a short break, but up next, the World Health Organization cautions against artificial sweeteners, saying that they do not provide any long-term benefit in reducing body fat. A detailed report when we return. Well, the big global story. The World Health Organization has cautioned against the use of artificial sweeteners. The body has warned that the long-term use of artificial sweeteners does not really serve the purpose when it comes to either reducing body weight or keeping you in better health. Instead, it could pose health risks. The WHO has instead recommended that people reduce their sugar intake in their diet altogether. Ekta standing by to take us through what the WHO has advised and why. Ekta.
Thanks for that. Well, yes, from sugar sachets to frozen desserts to baked goods, artificial sweeteners are present in many things we consume. And now, the World Health Organization is raising the red flag on the substitutes for sugar. WHO has warned against the use of artificial and non-sugar-based sweeteners, especially to control body weight or reduce the risk of non-communicable diseases. The WHO warns against the use of artificial and non-sugar-based sweeteners such as aspartame, cyclamates, neotame, saccharin, sucralose, stevia and stevia derivatives. WHO says the long-term use of artificial sweeteners as per the organization increases the risk of type 2 diabetes, cardiovascular diseases and even death in adults. Artificial sweeteners, according to WHO, have no nutritional value, are not essential in diets and do not provide any long-term benefit in reducing body fat in adults or children. WHO's exception to this guideline, however, is individuals with pre-existing diabetes, and artificial sweeteners can also be used in personal and hygiene products such as toothpaste and medications. Otherwise, their guideline applies to all adults and children and for all manufactured foods and beverages which contain any and all sweeteners which are classified as artificial, either occurring naturally or synthetically. The WHO has said replacing artificial sugar with real sugar does not control weight in the long term, and people need to consider other ways to reduce their free sugar intake, say by consuming foods such as fruits with natural sugars. The other option, they point out, is to consume foods and drinks which are not sweet. All this, they recommend, should in fact begin early in life and could be done by reducing the sweetness in the diet as a whole. While the WHO has warned against all artificial sweeteners, this is not the first warning for the industry, which is worth over $15 billion globally currently. On the latest WHO report, manufacturers of some of the top artificial sweetener brands in India say it is not a comprehensive enough study, but experts say the wind might be blowing towards companies looking at low-calorie sugar or sugar derivative substitutes, which the WHO is okay with. Lastly, there are differing views on non-sugar sweeteners. For example, the US drug regulator, the US FDA, has approved 6 sugar substitutes in the US and has given a generally recognized as safe or GRAS status to stevia and monk fruit, which are plant-based or natural, to the extent that stevia is also considered safe for pregnant women as well.
All right, Ekta, appreciate you joining us. I would imagine that this is going to stir up a fair degree of debate, but that's the latest coming in from the WHO as far as non-sugar sweeteners are concerned, their use and their consumption, the WHO warning against them. 15 months after notifying the semiconductor PLI scheme, the government is yet to finalize candidates. Government sources tell us that the telecom minister met with over 45 companies and some of the biggest players in the industry. Ashmit is standing by with details. Ashmit, so any progress on being able to take the PLI for semiconductors forward?
Well, there appears to be a recalibration of approach. What highly placed sources within the government tell us is that they're no longer gauging the progress of the semiconductor journey with applications or investments coming into fabrication. In fact, what we're hearing is that the government sources are indicating that they're not looking exclusively at fabrication, but also looking at the entire ecosystem. So whether that's gases, that's chemicals, that's power, all of that was in fact on the table when the telecom minister Ashwini Vaishnav traveled to the US. His travels took him to meetings with 45 different companies, some of the biggest names in the semiconductor space, not just in terms of fabrication, but also in terms of designing in elements. That was under consideration. In fact, what highly placed sources tell us is that India, especially the telecom industry, is working closely with India's Consul General to build bridges with the Silicon Valley there. And as a part of that, they've given assurances to the extent that there's a large talent pool in the country. They've also gone on record to say, to tell some of these large companies that as far as India is concerned, they will assure 20,000 megawatts of green power. That's another aspect that has been placed on the table to invite more interest, to invite more, perhaps invitation, more investments from the US. And there is assurance coming in from the US players that there is, in fact, active interest in India as a destination of developing it as a semiconductor hub. The only catch being there's a longer time horizon that may be required to realize some of these aspirations of building a semiconductor ecosystem here in the country.
All right, Ashmit, appreciate you joining us. India and the EU have expressed their commitment to work together on WTO reforms. Both sides held a bilateral meeting and emphasized the need to expedite the ongoing India-EU FTA negotiations. Abhimanyu standing by with more. Abhimanyu, what was discussed?
Co-chairing a working group meeting on trade, investment and resilient supply chains, India's Commerce Minister Piyush Goyal and European Trade Commissioner agreed to work together for WTO reforms and to resolve several pending issues which are possibly coming in the way of the FTA negotiations which are currently going on between India and the European Union. The next round of talks, that is the 5th round of talks, are expected to take place from the 19th to 23rd of June in Delhi this year. Both the sides have agreed to work as well as resolve several pending issues. We have seen in the recent past there have been pending concerns on both the sides, be it on the carbon border adjustment mechanism as well as past differences at the WTO on the issue of subsidies and fisheries. And more recently we have seen the ICT products WTO ruling which had come against India, in which India is in all likelihood going to challenge the ruling. India and the EU were on the opposite sides of the fence. So clearly several issues are on the table which are being spoken about, and both sides have agreed to resolve the same. The EU had representatives from Business Europe, Digital Europe, Food Drinks Europe, Copa Cogeca and several other companies, whereas the Indian business leaders were representing several industries like chemicals, metals, textiles, digital infrastructure and steel sectors. It remains to be seen what will be the key takeaways from this meeting and till what extent that is going to expedite the FTA negotiations.
Abhi, many thanks for joining us. Now, US-based Baron Capital Group has marked down Swiggy's valuation by 40%. It's pegged it at just over $6 billion. The markdown comes days after Invesco cut its valuation for Swiggy. This was the second time in 4 months. Akhil is standing by with the details. Akhil, so markdowns coming in for Swiggy and, of course, many others.
That's right. Baron Capital has slashed the value of its holding in Swiggy by 40%, bringing the food and grocery delivery giant's valuation down to $6.4 billion from $10.7 billion earlier. In fact, the US-based Baron Capital has kept the value of its holding below investment value for at least 4 out of 5 quarters since picking up a stake in January 2022. That's when Swiggy raised a $700 million round in its Series K round at a valuation of $10.7 billion. Baron Capital is not the only investor to have exercised a valuation markdown in Swiggy. Last week, we reported that Invesco had cut Swiggy's valuation for the second time in less than a year to $5.5 billion. Invesco also implied that it observes other market participants in determining fair value of its holdings in a portfolio startup. That brings up the comparison with Zomato, which is Swiggy's key competitor. Zomato has seen its market capitalization slip by nearly 50% since listing in mid-2021. And its market cap has largely hovered between $5.5 to $7 billion this year, which Swiggy's investors seem to be targeting while they reset their books. Now, besides Swiggy, a series of India's most valued startups have suffered valuation markdowns. Oyo, Ola, PharmEasy, Pine Labs, and even India's most valued startup, the edtech giant Byju's. Back to you.
Akhil, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC-TV18. The news continues.